believe is feasible, and it's certainly desirable and viable, is this $20 billion by 2020 in revenue and a 30% operating margin and an $80,000 revenue per employee ratio. So currently we are at approximately $52,300 per employee revenue. To increase this so significantly over the course of the next 6 years is something that would be, I believe, necessary for a next generation services company. I believe that we can get there by slowing down the rate of growth. If you just do the math on it, 20 billion, 250,000 employees, $80,000 productivity. Currently we are at about between 175 and 180,000 people. And so roughly, you would see that adding 70,000 or so people over the course of these 5 years or so, and augmenting the people with software, with productized services that amplify them significantly, that improve their productivity in a very dramatic way, and bring that benefit to the customer in terms of better efficiency, better automation, and things like that. So we break down that 20 roughly, and this is not a financial forecast. The financial forecast is what we have done for this year, which is 10 to 12% constant currency growth. But if we just break it down, we have modeled that out as roughly $1.5 billion of that would be contributed by acquisitions that we would make in new areas between now and then. Or at any rate, no more than that, or actually I shouldn't even say no more than that. Roughly right now we are modeling 1.5 through an inorganic investments that we make, 10% through the new services that we are, which will contribute $2 billion in revenue by that time we expect. And the remaining would require a growth rate of between 13 and 14% year-over-year cumulative growth. And we believe that that is achievable by transforming our existing services using the power of automation. So product engineering, infrastructure, application development and maintenance, services like this, which we think will become much better as a result of automation, and would then see the benefits from that.
Like you mentioned, there is a deeper shift underway and everything, and if that's the case, why continue to report based on the older parameters? When will you start doing reporting on the newer parameters like revenue from the digital services and the breakup on that? And secondly, why has Finacle been added to Edgeworth now? And why not before, and why now? What is the future do you see there?
So we will report the new categories as they become relevant and material. Right now these are small. I mean, even though there are roughly 250 projects that I talked about, and these are high value, high margin type projects, these are not material in the grand scheme of things yet. It will take another couple, 3, 4 quarters before they become a meaningful revenue contributor that Rajiv would, put a separate line for. And in terms of Finacle, we had an awesome quarter in Finacle. We grew by close to 15% in constant currency, from 65 million to almost 75 million in revenue, which demonstrates the power of the solution, it demonstrates the power of the leadership of Michael, and the fact that we have built a solution that has that serves a very credible need in the financial world. So today, 1/5 of the world's banking population is banking on Finacle. And we see that there is a tremendous opportunity there for Finacle to grow. In fact, for Finacle to become a $1 billion business out of this 20 billion aspiration in 2020. Michael is obviously a great leader of building these productized services and software as a service. And therefore, he is the right leader to combine these two organizations into one, so we can focus our efforts in this productized services area. So we have given him that responsibility for that entire thing. He has hired a new leader for the Edge area. And in Edge, we have seen significant improvement. Just this quarter, Syngenta just mentioned to us that they went live with TradeEdge with 2 states in India, where the dealers of Syngenta serve the farmers. And 43 dealers are now live, serving tens of thousands of farmers in Karnataka and in Gujarat. And over the course of the next year or so, many more states and many other countries in this region will all go live on TradeEdge. We think that TradeEdge is an awesome application to connect the world of dealers, distributors with the CPG, agriculture type companies. And there's a huge opportunity there, as well as in the other 5 Edge applications and any other Edge applications that we invent. Scava, the company that we just acquired, is another example of this kind of a mobile commerce company. They do have a core intellectual property inside the company with these next generation services wrapped around it. So this is a perfect example of something that fits along with our strategy.
How will it help the services company by completely separating the products from the services?
It is not So today we are looking at this as Finacle or Edge, but over time we see that the services will become ones where the people go together with the software. You can think of it as a context that is surrounding a person that goes in to deliver a service and brings together a collection of tools that dramatically amplifies their ability, that dramatically improves their productivity. So if you look at an airline pilot today or someone in command of a train, these are very different than airline pilots or engine drivers from 30, 40 years ago, because there is tremendous automation inside these. So one person can do the work that used to take dozens of people and things like that. This happens in every industry, and we see that happening in our industry. With automation, we see that infrastructure management, for example, 70 to 80% of the work that is done can be replaced by automation, where people become the managers of exceptions.